According to the Bureau of Labor Statistics, regular old folks like you and me have up to 15 different jobs in your career. And if that's the case, that means that you're probably spending less than 5 years at every single job. So odds are you might be going through a job transition when you want to apply for a home loan and get qualified to buy a house. If that's the case, there are some tricky loopholes that you might need to jump through, especially if you're relocating to a different state or country. My name is Nicole Nark. I'm a real estate broker in Central Arkansas, and today I want to talk to you about what you need to be cautious of if you are going through a job transition while applying for a loan or trying to apply for a mortgage right after you started a new job, possibly in a new state. So first of all, I would like to make the statement that it is 100% possible to get approved for a home loan while going through a job transition. And in fact, I've actually even helped clients get approved for their loan, go under contract on a house, and buy the house while just having an offer letter in hand. They haven't even started the position that they're going to be taking yet. So there are a couple things that need to happen here, and I walk through this a lot with clients that I work with who are moving to Arkansas from other states. Most lenders are going to be able to take that offer letter and actually give you a home loan based off of the amount that you're going to be making at your new job, even if you haven't started the job. Now, I will tell you, don't try to be creative with this or lie, because the lenders at closing are going to make you sign a bunch of statements saying that you are not lying about taking this job. And in most cases, you are actually still going to have to provide a copy of your first pay stub from that job, even if you've already closed on the house. That's just something to keep in mind. So yes, 100% you can get approved for your home loan, even if you haven't started the job, if you have agreed to the employment terms and you have an offer letter and are ready to go. One thing that is important to note is that the majority of lenders that I have worked with for situations like this are actually going to also require verification from your future, your new employer, that you have passed a drug and a background check. The lender wants to make sure that the employer you are going to be working for has very much so vetted you and has every full intent to add you as an employee to their company. So for anyone who is thinking about relocating, this gets a little bit trickier. Universally, you cannot qualify for a loan on your primary residence. So if you're going to buy a house and it's going to become your primary residence, you cannot qualify for that home loan using income from your job in another state, because lenders don't understand, nor are they really willing to compromise on you being employed over here and getting this income, but your primary residence is going to be in another state, so obviously you're not going to be working there anymore. They want to make sure you can pay for your house. So unfortunately, we cannot use that income if you're trying to get a loan for your primary residence in another state. With that being said, we could use your income from your current job in another state prior to relocating if you are okay with writing off the house as an investment property. Now, there are pros and cons to that. The pro is you can stay at your current job, buy the house, and you don't have to worry about the job transition thing and proving the income and all that stuff. The downside to doing this is that if you write off that house as an investment property versus your primary residence, you are probably going to have a higher interest rate on that loan because it's an investment, and you are going to have to put a bigger down payment down. To finance a investment property, most companies are going to want 15 to 20% down. Now, right now, specifically when I am making this video on August 12th, 2020, Interest rates universally are very low across the board. All interest rates pretty much are lower than they typically are. When it comes to residential, this is true. Whether it comes to, commercial loans, investment loans, all of this is true. So if you were potentially going to buy a house conventional because you have a good amount of down payment and you didn't want to have to go through the hassle of getting a new offer letter, switching your jobs, you wanted to, use your income and your current job, buy the house, then move, you could do so. Because you were going to put the down payment down with a conventional loan, you could use that same amount of down payment, probably 15, 20+%, and do an investment property loan. And since, like I mentioned, interest rates are so low right now, you're probably going to get a pretty competitive interest rate. Of course, it's not going to be the 2.5 to 3% that residential mortgages might be locking right now, but it's going to be much, much lower than the investment interest rates that people were locking just a few months ago. So overall, this is not a bad situation to explore right now. If you are relocating, you want to stay at your current job to at least finance the house starting off, and you have a down payment to put down. One question that I get a lot is, do I need to be on my job for a certain amount of time before I can start using the income that I am getting to put towards a house? And the quick answer is no, absolutely not. As long as you have a pay stub, you've been paid one time, we can pretty much use that job and that income towards getting you pre-approved. Most lenders are gonna wanna see about a 2-year work history, and depending on your situation, you may not have that. But there are always exemptions, and that's why I always recommend that you have conversations with your lender. If you explain more and more about your situation, your lender is gonna get to know you better, and they're gonna be able to help you figure out what you need to do to qualify. I know when I was buying my first house, I was super afraid to talk to my lender about, if I was struggling to come up with a down payment, or, how long I had been on my job, because I didn't know, if they were gonna think less of me or anything like that, and that's not the case at all. The more candid you can be about your financial situation and what you might be struggling with, the better your lender can help you out. With that being said, if you have not been on your full-time job for 2 years, there are some other options. If you have maybe just graduated from school, we can use your schooling as work history as long as there can be a connection tied between what you got your degree in and what you were studying and the job that you took. It is worth noting that if you are currently working part-time, the lender is going to want to see and will request 2 years of work history for you. I hope that you guys enjoyed this video. If you have any more questions, leave them in the comments below and I will make sure to get back to you with some answers and guidance. I put out new real estate videos on this channel, so make sure that if you haven't already to like the video and subscribe. I would really appreciate it, as well as any feedback that you have or more topics that you want to learn about. I'm constantly trying to make content that will best suit your needs and help you achieve your real estate goals. In the meantime, I hope you all have a great week and happy house hunting.